Hello, everyone. Today we're going to be presenting an analysis on Zillow Group. As part of the presentation, we will cover an overview of the business and an analysis of the company's competitive position and strategy. Next slide. Founded in 2004, Zillow Group is a leading online real estate marketplace that offers innovative tools and resources for home buyers, sellers, renters, and real estate professionals. The company has a database of approximately 160 million US homes and generates revenue from the sale of advertising and business tech solutions, home originations, and display advertising. Under the Zillow umbrella are numerous brands that serve different parts of the market in different geographies, such as Zillow Premier Agents, Zillow Rentals, and Out East, to name a few. The company is led by seasoned founders from the tech industry, including the founder, Rich Barton, who previously founded Expedia and Glassdoor. To maintain its edge in the market, Zillow leverages several competitive advantages that make it the go-to digital marketplace for all parts of the home buying process. Some of the competitive advantages are a large, trusted brand, a living database of homes with advanced data science and tech advantages, and superior industry partnerships with real estate agents, brokers, builders, and more. Next slide. Zillow primarily pursues a differentiation strategy by offering unique features and capabilities that are difficult to replicate, including their proprietary tech and tools such as the Zestimate valuation tool, a comprehensive database, brand recognition, and data utilization. They have created a strong moat by building the Housing Super App and providing coverage all along the home buying value chain under one roof. From a growth standpoint, Zillow intends to expand real-time touring and listings, help increase conversion, and expand offerings to include insurance, renovation, moving, and home appraisal services. The company sits in a $187 billion addressable market that is growing and will continue to expand as they move into more diversified verticals such as insurance. Next slide.
Now to review the positioning versus industry competitors. As you can see on this chart, noting the average monthly visits in millions for the year 2023 to the websites of these respective companies. Zillow is far and away the industry leader. Next, we have Realtor.com with about half of the monthly average visits, though it has far more monthly visits than any of the other competitors outside of Zillow. It occupies a very different niche in the market. It's very traditional versus Zillow's tech-driven approach. We also have Trulia, which, as Bryce noted before, is now a subsidiary of Zillow. However, for the purposes of the brand analysis, it'll remain distinct. Redfin is probably the biggest threat to Zillow in their corner of the market. The biggest tech-driven competitor for sure, though they have recently been beleaguered by severe financial issues. And then at a distant fifth place, we have Homes.com. It's a very traditional and specialized non-comprehensive platform, and they are probably not considered too much of a threat to Zillow. Next slide, please. Next, we have the map positioning versus industry competitors. As you can see here, Zillow is far and away the most comprehensive and tech-driven firm, which is much of the reasoning behind its competitive advantage. Redfin is also a competitor in Zillow's niche. However, as I mentioned before, financial issues and things we'll get into later in the presentation make them a limited threat to Zillow. Some of the key points of differentiation that set Zillow apart are AI and machine learning integration, which Zillow has adopted most readily of these five firms. Features such as the Zestimate use AI and machine learning to provide real-time dynamic property valuations. Also, we have data aggregation and monetization utilized by Zillow. Data such as historical sales, tax assessments, local trends, and user-submitted information. The monetization that Zillow participates in is also more diversified than its competitors. That consists of lead generation for agents, data sales to developers, and partnerships with mortgage and insurance providers. This gives them a varied revenue stream, which, as you'll see, is quite an advantage for them. Third and finally, we have comprehensive services, which, as you can see from the chart here, several of Zillow's competitors aren't focused on. And Zillow positions itself essentially to be a one-stop shop for all online real estate needs. And next, we'll go to Greg with the 5 forces analysis.
So nobody's exempt from the five forces, and let's do a quick lab to get a better sense of how this impacts Zillow. First up is industry rivalry. Definitely a high risk, demanding that Zillow keep investing in innovation differentiation to head off other vendors such as Redfin, Realtor, and CoStar. Then we got the threat to new entrants is definitely moderate to high. The low entry and cost for a well-funded entrant can definitely be able to disrupt the market space. The bargaining power of buyers is also high, and the simple reason is home buyers, renters, real estate agents all have alternatives that they can turn to. But when we look at bargaining power of suppliers, definitely has leverage. Low cost to switch content and tech vendors allows them the ability to be able to offset that. But the threat of substitutes remains high because other companies like OfferPad, Facebook Market, Compass, all provide a high risk of user churn because they're providing users with alternative platform and services. Now, we're not going to go through everything, but for their internal value chain, we can clearly see that even among their 29 subsidiaries, their core values are prioritizing customer experience and employee collaboration empowerment, coupled by a distributed workforce that encourages growth and development, and a really tricked out tech stack with everything from AI integration to 3D virtual tours, a housing super app, allow them to bring in those inbound logistics where they're bringing everything from MLS and data onto their platforms to push out real-time data, API feeds, a variety of different marketing and sales channels to be able to provide services and deliver services such as mortgage facilitation, rental apps, and a really cutting edge real estate analytics that really makes them on par as being the leader in the market space.
A DuPont analysis of Zillow and their closest peer, Redfin, shows that both companies have struggled to capture value in recent years. Both of these firms had difficult periods in 2021 where Zillow has been able to narrow their net income slash loss, where Redfin has continued to experience losses in eroding shareholder equity. This erosion of equity has driven the leverage factor upwards up to 27 turns in 2023 and has driven return on equity into severely negative territory. Meanwhile, in recent periods, Zillow has been able to improve performance. And on the next page, we show how they have beaten Wall Street estimates almost across the board. From top line revenue, 3 of the 4 segments, adjusted EBITDA, GAAP income, and EPS have all been able to beat estimates. On the next page, we show their stock price performance for both Zillow and Redfin, and both of these companies saw significant stock price appreciation through 2021, while the low interest rate environment was conducive for mortgage origination. Both of them struggled during the interest rate rise following that period. Zillow, on the other hand, has been able to recover some of the losses in recent years, while Redfin has continued to sustain losses and their equity price has remained suppressed.
So no successful company is going to be exempt from a rivalry, and Zillow is no exception to that either. Among their threats, Redfin and an industry threat. So what makes Redfin a particularly danger is the fact that both Zillow and Redfin offer digital platforms for searching homes to an overlapping customer base. For their market positioning customer base, they're offering home search tools, agent services that target the same market. Redfin's lower commission model directly challenges Zillow's traditional agent-centric advertising model, and both are heavily investing in technology and data and analytics. When we look at the industry, regulatory changes are applying pressure and impact to the revenue streams, competitive pressure, and a regulatory risk market that is evolving, specifically among their real estate commission structure. All this is actually possibly more disruptive to their bottom line than Redfin would ever be.
Now I'll be discussing how Zillow leverages advanced technology and data analytics to stay ahead in the real estate industry. At the core of our strategy is the Zestimate model, which uses cutting-edge algorithms to provide highly accurate property value estimates. helping users to make informed decisions and creating more transparency throughout the industry. Zillow has also implemented a language search model, allowing users to search for properties using everyday language, making the process more conversational and accessible. Their virtual home tours offer immersive property viewing experiences, enhancing users' engagement and making the home buying process a lot more efficient and fun. Finally, Zillow's AI-powered personalized recommendations analyze users' behaviors and preferences to suggest properties that meet their specific need. Through these innovations, Zillow continues to refine and improve the ways users interact with the real estate market as a whole.
We now shift to looking at how Zillow is situated to maintain their competitive advantage in the industry. Greg discussed the 5 forces earlier, and while there were multiple high-level threats, Zillow was positioning itself well to maintain its primacy. They are consistent internally and externally, with their strategy aligning well with their technological prowess and innovative vision that Bryce, John, and TJ have discussed. Their internal consistency had wavered with their foray into directly buying and selling houses, but divesting from that area has streamlined their operations in line with their vision. Their commitment and pursuit of the super app reflects this renewed alignment, and it has given investors the confidence that Kevin detailed. They've demonstrated resiliency with challenges as varied as the housing crash to their self-inflicted losses with direct investment, and their financial position grants them a stronger moat than their competitors. With that said, a dynamic risk like an unexpected challenger is a threat to their sustained advantage. Their larger risk in this field, as Greg mentioned, is the potential for regulatory change upending their strategy. I'll now turn it over to Kevin to share some of our key learnings.
To summarize here, we have found that the market structure reflects similarities to the internet search market where the winner takes all. We found that Zillow has been able to differentiate itself from its competitors by significant investments in technology that have been able to provide a superior product. The results appear to be a negative trailing return on equity for Zillow, but dramatic losses from many of their peers. We expect that Zillow will be able to capitalize on this as their peers fall to the wayside, and Zillow should be able to provide outsized economic returns and capitalize on value capture. And with that, that can conclude this presentation. Thank you for joining.